Alright, let's talk about the two scariest things in crypto life, taxes and losing your private keys. But don't worry, today we are only tackling the crypto taxes in Canada. If you've been buying or trading crypto, the CRA, that's the Canadian Revenue Agency, might be curious about your gains. And in this video I will break it all down for you. We are keeping it simple, so no accounting jargon, and I'll even throw some tips in to make your life way easier. So what kind of taxes are we actually talking about here? In Canada, crypto falls under two main categories of taxation, the capital gains tax and the income tax. Capital gains tax. You are taxed under CGT when you dispose of your crypto, meaning you sell it, trade it or use it to buy something. These transactions involve gains or losses calculated based on the difference between the acquisition cost base, what you paid for, and the value at the time of disposal. Here are the transactions that trigger CGT. Selling crypto for fiat, for example Canadian dollar. Trading one crypto for another. Using crypto to buy goods or services. Gifting crypto, taxable based on the fair market value at the time of gifting. Disposing of crypto received from airdrops, mining, staking or lending. Gains made from selling these assets are subject to capital gains tax. And here's the key thing. In Canada, only 50% of your capital gains are taxable. That means if you gained $10,000, you'd only pay taxes on $5,000. But more on that later. The income tax. This applies if you are earning crypto instead of buying it. Income from crypto is taxed just like regular earnings, so it's added to your total income for that year. The higher the income, the higher the tax bracket you fall in. The fair market value of the crypto at the time of receipt is treated as taxable income. This applies to mining rewards, staking rewards, lending income, and getting paid in crypto for goods or services. Quick reminder, one thing to keep in mind, if you're just holding your crypto, transferring it between your own wallets or receiving crypto as a gift, these actions aren't taxable. Now that you know when taxes apply, let's look at the big question. How much do you actually have to pay? The answer depends on whether your activity falls under capital gains tax or income tax. Capital gains tax. In Canada, only 50% of your capital gains are taxable. This taxable portion is added to your total income for the year and taxed at your personal income tax rate. Here's an example. Let's say you made $10,000 gain by selling Bitcoin. Only $5,000 of that is taxable. So if you are in a 30% tax bracket, you'd pay $1,500 in taxes. Income tax. If you earn crypto, the CRA will tax it at your regular income tax rate based on the fair market value of the crypto at the time you received it. The higher your total income for that year, the higher is your personal income tax rate, which ranges from 15 to 33%. So keep in mind that crypto earnings can push you into a higher tax bracket. Key reminder. Remember, whether it's capital gains tax or income tax, the CRA expects you to calculate these amounts accurately. Keeping detailed records is essential to avoid paying too much or too little. Now that you know how much tax you owe, let's talk about the steps to actually report your taxes. Alright, you've tackled your transactions, figured out which ones are taxable, and now it's time to report everything to the CRA. Here's how it's done. Keep accurate records all year. First things first, the CRA expects you to have a detailed record of all your crypto transactions, and here is what to track. Dates of transactions. What you bought, sold or earned. Amounts in Canadian dollars, converting using an exchange rate at the time of transactions. Receipts or proof of purchase or sale. Using crypto tax calculators can save you a ton of time here. CoinTracking can create a detailed tax report tailored for the CRA's requirements. This means less time stressing over spreadsheets and more confidence that your taxes are accurate. Calculating capital gains. For any transactions that fall under the capital gains tax, calculate your gains or losses for each transaction. The gain or loss equals the proceeds of sale minus the adjusted cost base. And remember, only 50% of your total capital gains are taxable. Income from crypto. If you earn crypto through mining, staking or lending, use the fair market value of the crypto at the time of receipt. File your taxes with the CRA. When it's time to file, include your crypto gains and income to your tax return. Use the Schedule 3 form for capital gains. And report your crypto income in your total income tax return, the form T1. Now that you know how to file, let's talk about how you can save some tax money. Let's be real, no one loves paying taxes, but the good news is there are legal ways to reduce your crypto tax bill in Canada. Here are our top 3 tips to help you keep more of your hard-earned money. Use capital gain losses to offset your gains. If you've had bad trades, you can use those losses to reduce the taxes on your profitable trades. Here's an example. If you made $5,000 in gains but lost $2,000 in another trade, you will only have to pay taxes on $3,000 of gains. And you can carry forward unused losses to offset gains in the future years. Contribute to a tax-free savings account, TFSA. A tax-free savings account is one of the best tools on saving taxes in Canada. While you can't directly hold cryptocurrencies in these accounts, you can invest in crypto-related funds or ETFs within those accounts. The beauty of a TFSA is that any gains you make are completely tax-free. For 2024, the annual contribution limit is $7,000, and if you haven't maxed out that contribution in previous years, you may even have more room available. Investing wisely in a TFSA allows you to grow your portfolio without worrying about the CRA tracking you. This makes it a powerful option for anyone looking to reduce their crypto tax burden. Use a registered retirement savings plan, RRSP. Another smart way to reduce your crypto tax liability is by contributing to a RRSP. Contributions to an RRSP are tax deductible, meaning they lower your taxable income for the year. While you can't directly hold cryptocurrencies in those accounts, you can invest in crypto-related funds or ETFs within this account. This not only helps you reduce your taxes now, but also allows you to defer taxes on any growth until you withdraw them in the retirement. While you can't directly hold cryptocurrencies in an RRSP, you can invest in crypto-related funds or ETF within this account. This not only helps you to reduce your taxes now, but also allows you to defer those taxes on any growth until you withdraw those funds in the retirement. By taking advantage of an RRSP, you are effectively saving taxes while building a nest egg for the future. With all of this in mind, let's have a quick look at the tax deadline. The deadline to file your personal income tax return is typically April 30th of the following tax year. For 2024 taxes, that means that your filing deadline is April 30th, 2025. If you are self-employed and your crypto activities are considered a trading business, you get a little bit more time. Your deadline is June 15, 2025, but any taxes owed are still due on April 30th. Missing these deadlines can result in penalties and interest on unpaid taxes, so make sure to mark that in your calendar and file on time. And that's it, your beginner's guide to crypto taxes in Canada. If you want even more details, check out our comprehensive written tax guide linked in the description below. And don't forget to like, subscribe and share this video with your fellow crypto enthusiasts. Got questions? Drop them in the comments. Thanks for watching and see you next time.